GarageBand. Let's move that to trash. We're going to open up GarageBand. If you are just starting to listen to me, what's up on the screen is TrendSpider. There's a link below, 25% off using the code DSP25. And I am starting up my Active Trader Pro, getting this all set up for us. We will look at GNS again. Let me get, I'm going to turn on my focus mode, and we're going to start doing some scans on TrendSpider. So we can find, I do have a list of short squeezes that are being played. Good morning, Zephin. And let's move over to TrendSpider. Hit that like button. I am going to hit it myself. Like. Live chat. You guys know the, what the hell? It is not in use. BS. I have to restart my DRV trigger. I have been dealing with a morning Cooper, morning James, a sick dog. So I may be up and down a lot today. She had, I think we were up 6 times last night. So she had a bit of a seizure yesterday. And my CNBC app. Boy, I hate Roku. I don't know about you guys. There ain't no freaking way I'm following Kathy Woods into Roku. My Apple TVs perform so much better. Now, my Amazon TVs suck. They're the worst. Boy, my lighting is horrible here. I have to work on my lighting. The lighting needs to be a little bit better. But yeah, let's move over to our scanner. One that I am going to tell you guys about, though, is Wayfair. If you haven't looked, Wayfair had an enormous day on Friday. They announced something. Hold on, let's go to FinViz. They said something because it was up 20% on Friday or something. Make no mistake, they are not making money. Wedbush upgrade $38. JP Morgan upgrade $63. Bank of America upgrade $65. Job cuts prompt double upgrade by longtime bear. 20% jump. Yeah, and they're still jumping. So here's Wayfair. In the morning candle on Friday, 11% just between the high and the low. In the afternoon, it was only 0.4, so it stayed up there. Right now, it's trading at, I'm going to switch to Active Trader Pro because we'll do a 2-day chart on Active Trader Pro. There's GNS, our buddy. It will get short squeezed again, by the way. Right now it's at 52. Still down below where the price target of the monkeys are. But look at this move. This is pre-market. This is where they announced the layoffs down here at 39. You'd be at 51 if you just, kind of listened to the news and bought at the time of layoffs. You see the afternoon. The afternoon had no volume, nothing. And then this morning, it just continues up. You got a big spike here on the current candle, but that's a 9 o'clock candle. It's probably screwed up anyway. But yeah, Wayfair is one that crazy day. Let's go over to scanners. By the way, you're in the algorithm. If you're new here, the algorithm had you in at 33 and you're trading at 56. You've almost doubled your money since January 4th just on this one stock. It's not one that I would have said buy because you've got this gap down here. But since you crossed this 200-day right here, the bigger gap that you have to cover is up here between 52 and 54. If you cover that one, I have no doubt in my mind it's hitting that $65 price target at 66 to 68. So watch the close today. Morning, Sherry. And I'm just going to get into scans. And I don't know, Sherry's West Coast. By the way, Sherry, Zephin is West Coast too. You guys are waking up early. I slept in. My retired ass should be sleeping in till like 11 o'clock. And the other thing I wanted to do, let's see. Let's go to YouTube. Because there I'm live, but let's go to live. Ask Kevin. If you don't know, he's the biggest fucking grifter on YouTube. He made a fortune, and I guess he's not live. There he is. This is the guy. He made a fortune. He's got production value unbelievably good. The guy, though, goes on CNBC and starts, touting how much money he made and stuff like that. He basically would post about 20 during the pandemic. When the pandemic started, he would post about 20 to 30 videos on how to get free money from the government. A lot of them were illegal. A lot of them were, hey, take PPP. If you just start an LLC and take PPP. I don't like the guy. And he started his own ETF. Now, he's got 6.3 thousand people. So 6,300 people watching him. By far the largest live stream right now. Well, let's see. 4.8 on Bloomberg. He's got more people watching him. These guys have 5.5, but they're on every day. They're pretty good. These guys are pretty good if you're watching stock pick stuff. And I don't mean to send you over and look at this one. Trump launches unprecedented attack. Look at the graphic on this one. Wow. My graphic isn't horrible. Oh, and bro, we got to get on the vape. Let's go shirtless and get on our vape if we're going to tune into this dude. Yeah. This is sad. 71-year-old guy shot up 10 and killed 10 people. Stocks, rocks. How are you supposed to look at this screen and understand? I mean, this is options, and that's options flow, and that's volumes, blah, blah, blah. God. Look at this guy. He's got 184 people watching. Look at his cover. And he's right, by the way. Crypto is going crazy. Crazy. Official lens, 381 people. God, I feel like such a grifter having you guys tune in and stuff. Hold on, I got to take a hit from my vape. Mike's right. I'm not grifting you guys at all, though. I mean, let's be honest. If I were a grifter, I would charge you for stuff. Or I'd have a link to my course down below. The difference between me and the grifters is I want you to get TrendSpider. But that's for you. That ain't for me. You can use TrendSpider whether I use it or not. By the way, look at this. Podcast favorite, Qualcomm with a cross-up. It's a double cross-up. Let's go back to the strategy tester. This is in the daily stock pick core portfolio that I have in TrendSpider, which you can get access to even if you don't get the elite version. If you just get the standard version, I'll give you access to this one. You can get access to it. But if you have a question what's in there, just ask me. I don't keep a list, but I update it pretty regularly. This is Qualcomm. Buy in at 107, 122. And this is with Apple saying, hey, we're going with our own chips, not Qualcomm's. Yeah, what a great stock. What a great stock. Ugh. But Qualcomm, is in our scan. Okay, let's go. We go from core investments to my portfolio, which doesn't have all the core investments, by the way. So let's say XLK, because I'm in some riskier stuff, like one that got a cross up, SQ. IGM is one that it's an ETF. I think on clean energy. Expanded tech sector. It's a tech sector ETF. I probably shouldn't be in it. There was a great thing that I put on my Instagram about how to, I think the Global Investor had posted it, how to evaluate an ETF. And I know I've gone over it before, but it's always good to look at that stuff and make sure that you're in the right space. We're going to have a lot of cross-ups, by the way, I think. It's looking, right now we're looking at the energy sector. So I'm scanning the energy sector. Nothing in our energy plays crossed up. Wow. Let's look at our levered ETFs to see if anything crossed up. I like DRV around these areas. I'll look at DRV. I'll add DRV in for Mike. Or if you're James. DRV. And remember, I timed SQQQ. We're going to do our low cost. I'll look at McKesson. Low cost ETFs. We have VEA and VXUS. Cooper, and I have Boyle to talk about. My only thing about Boyle is, I mean, we've gone over the long distance kind of, monthly charts on that. And it's, TQQQ is looking okay. But Boyle is one that you want to be careful about. If you get, at these levels, I don't know that I necessarily think Boyle is a hold even overnight. Or then for that level, KOLD. KOLD has just run up so much. We'll take a look at them though. The chips have just been coming back. SOXL is crazy good. Crazy good, I think. I do think that XOXL is great. Hey, and if you're here, hit the thumbs up. While I scan, I'll start this podcast in a little bit, but hit the thumbs up while I scan. These are what I'm scanning right now is the spider sectors. And since folks haven't been in here very long. I had a sick dog over the weekend, so I started late, and that's why I'm doing scans so late. And I'm here so late. I'm going to go into my personal watch list. Holy cow. Oh, my God. PLRT, SPLK, Netflix with a buy. Honestly, Netflix may go on the core portfolio. I haven't put it on there just because I've traded it. I haven't owned it. But God, that's a company with $3 billion of cash flow. I mean, that's just crazy, $3 billion. Yeah, so oil had I'm not going to go over it, but I'll kind of go over my thoughts on oil, and it stays the same. China reopening. Oil's a buy. I mean, India over the weekend, I think they rationaled their buying of Russian oil. They said, just imagine if we weren't buying Russian oil, what your oil would cost you. Intuit is a buy. Oh, my God. I have so many scans to go over. And that's kind of, James, that's kind of my thing is it's run so much. I just don't, I can't imagine trying to get it at this point. Netflix is just, yeah, I don't have it in the core portfolio. Boy. These are some of the prime medicine. This is a ARC holding. Look into it. I mean, around tax time, you're under the 200 day. Are you serious? This is an interesting one, but I'm not going to put people into it. ANSS. Yeah. Into it. I mean, they just make money. And I'm a daily user. This is a 3D printer. I don't want it, though. I'm a Mint user, mint.com. And if you guys don't use Mint or personal finance, I think it's personal finance. There's two. Go and listen to my FIRE podcast, the first one. I guide you towards those two. Personal capital, I think it is. One or the other. Track your expenses. Yes, Evan, you heard Boyle. Boyle is still in. I mean, it's interesting. I just don't think it's turned around. I don't think that it has enough long term to say that you're going back to 50. You're heading into summer. You've got holy shit, the NASDAQ 100, Constellation Energy. This one just keeps crossing up, by the way. CEG. See, but that's over the 200 day. Illumina. This is an ARC favorite. Oof. It's under the 200 day. Yeah, but it's too expensive. Still not making money. Copart. Don't like that gap. Charter. I never officially worked for Charter, but I worked with Charter. And had I stayed at my employer, Time Warner Cable, I would have been a Charter employee. I know too much about the inside of Charter to actually invest in Charter. But that being said, this was a $60 stock that within a few months, it declared bankruptcy with Paul Allen, got their finances back in order, never went out of business, just declared bankruptcy, got their finances back in order, went back on the stock market, went from 60 to 400 within like 3 months. Made a lot of people over there very wealthy. And, yeah. I'm going to mention all of the cross-ups. Mention all the cross-ups. I'll go get TrendSpider. And I posted a great video, by the way, of a guy using TradingView. It was in a post, and I don't know how the hell to get to posts on YouTube, but I posted it on YouTube as part of this channel. So if you're subscribed, I think you can look at my posts. But if you're not subscribed, you should be subscribed because, ooh, look at this. S&P Shitty Bank crossed up. I'm going to put that one in because I do think if that's the problem is it's secondary cross up, and so it's still high up there. You can see on this chart, if I go to the strategy tester, which I will later, the ex-dividend date is coming up February 3rd, but the RSI is at 74. I mean, it's running so much. But after its earnings, you could have gotten it down here at 48. It's now at 51. So, okay. Let's see if we have anything in the energy sector. The daily stock pick energy portion didn't get any cross-ups. Doesn't mean that you shouldn't be in this sector. It just means that the companies that we have in that sector haven't had a cross-up. INDO. Indonesia Energy Corporation. I think I do have some listeners in Indonesia. EP, Empire Petroleum. That's an interesting one with that gap up there. Hoofa. But right around their earnings, they just continue to fall. I'm not even going to research. I got enough cross-ups that I don't have to reach for them today. Okay, we're going to go back to the strategy tester with our algorithm, and we'll take a look at some of our core portfolio. Apple, ascending triangle, wedge, whatever you want to call it. It's a pretty positive move here. Their earnings are coming up February 2nd. The MACD is above the oscillator there. The RSI is at 65. Long term, I don't think you have a problem adding it here. I've said this many, many times. At some point in time, this is a $150 stock. There are too many people holding this at all-time highs. And let's pull back here. And even though this doesn't hold a lot of quote-unquote weight, we're going to pull this back to January of last year. I'll pull it back to its highs. I don't know if it's actually going to go back to the highs, but we'll try it. Here is January 3rd. Let's see if it pulls it back there. Nah, it's just going back 1 year. So the volume only goes back 1 year on this one. But you can see there's a volume. Let me see if I can move this over. I can't. There we go. I'll move it over, and then I got to go drag that back. I wanted to show you these volume levels. So you've got 964 million shares here between 140 and 141. You have 106 billion shares between 143 and 145. Up here you have 151. Where's the price being taken? Traders are trading down here because they're just adding to their position. There's a lot more people who have bought up here than have bought down here. And the confidence level is low, but your confidence level should be high. And at some point in time, this between 140 and 150 is probably where this stock lives in a decent stock market. This isn't going to make you rich over the next year. It's not going to make you 20% in a day. It's not going to bring you the GNS gains that we saw last week. But this is a boring game. This is one you just want to add to. I say anything under 140 on this one is a great buy. Anything under 130 on this one is a legendary buy. Just kind of the way I see it. Now, if it gets down to 100, add to it. You know, one other one that we talked about that I've missed and I just don't believe in is Tsla. And I'll talk about this a little bit more. Tsla has gone through this with just shining colors. I mean, I cannot believe how well it's bounced off that 119 right there where you kind of lost it. And it went all the way down to 101. It touched the 100. But if we go back to the daily, and I'll do this on the podcast too, but if we go back to the daily and you look at this one, and I'm going to start recording the podcast here in a bit, there's this gap, 81 to 85. I think it touches that gap. At some point in time, I do think that it touches that gap. That's my thought on it. The earnings are coming up this week on Wednesday. Yeah, Wednesday. It'll be interesting to see what Elon says. Now, here's what you have to know about this is that, look at this. I mean, this is what's crazy. If you pull this back to May, let's just pull it back to, we'll do what we did in January. This was the high, around 400 right there. You still got people holding on up here at 250. That's where the main volume is, between 210 and 300. So between 200 and 300, there's a hell of a lot of people holding on. But there is this shelf, which is super, super strong, providing a big level of support to get through between 115 and 128. What he did that was masterful, that will be looked at in all business schools for at least the next 20 years, is he told us that we were heading into a recession. He has 28% margin. He was making on average about $15,000 per car. He cut the cost on average by $20,000. Cut into that margin. Doesn't mean that he's losing money. It just means that they were probably more efficient over the past time, and they could cut that margin. Gets more cars out there, tries to sell more software services, more charging. I mean, as a Tesla owner, I can tell you the charging has gotten completely out of hand. Where you pull up to a charging station in the middle of the day and there's 10, 15 people there. So it's a little crazy, but he's selling more cars. And so as we're heading into a recession, he actually creates demand by cutting prices. So, hey, and I got to go check on the dog. I'll be right back. Okay. Advanced micro up 3%. Sorry, she is under her blankets, I think. I didn't want to disturb her. So, but she seems fine. But yeah, Tesla is one of those that it's just bounced. Okay, I'm going to start the podcast. We're going to take a look at earnings too. What am I going to start the podcast with? Oh, let's look at SPY. We'll start out with SPY. Just to take a look at the overall market. By the way, the market is going to be up. Holy crap. I mean, this watch list that I've got, a hell of a lot green. Small green, Qualcomm's up 3%, Shopify's up 4%, Tesla's up 1%, Taiwan Semiconductor again up 1%. We haven't gotten our entrance into Taiwan Semi. Yeah, so Mike, you can feel my pain. 7-month-old puppy is similar to what I have to deal with right now, which is, at least your 7-month-old puppy is hopefully house trained a little bit. Mine is house trained where she runs to the door and cries. So I've got to, with my headphones on, it's a little hard to listen to, but I've got the TV turned up so that she'll have to kind of bark. She knows if there's noise in the room, she goes nuts. And it's the dark one, Daisy, that's sick. The little one, Penny, I have to get her allergy shot. Oh, 7 week. Oh, 7 week. Oh, damn. Everybody buy stock in a flooring company that sells carpet or floor replacement, because Mike's going to have to replace his floor soon. So, and we opened up and everything starts dropping. Let's see. Hold on. I'm going to go to Active Trader Pro, and we're going to look at, holy crap. I mean, Wayfair, remember when I was talking about it was at 51. It got the pop back up. It's all of a sudden at 54. Look at the pop on open. And the Bollinger Band's expanding. Boom, it's off for a run. Look at the volume spike. Just people buying like crazy. Oh, poor little puppy. We're going to look at GNS. Why do I put GN? Oh, it tanked. It's tanking. There were 3 short plays that Ziptrader brought up. GNS, which he thinks can pop again. LYT, which I don't think that GNS can pop again. LYT, which is kind of in the same boat. That's popping a little. That's getting a pretty big bounce. I mean, this candle alone, it opened up at 132, it went to 149. It's a big move in a 5-minute candle. And look at the volume. The volume pumped. And HIBZ. Those were the HLBZ. Hellbiz. I think that's what it's called. Yeah, Hellbiz. And this one dumped. Not a lot, but it dumped from 29.81 to 28. Now it's down to 27. But look at the volume pump. But those were his 3 short plays. So, yeah. But let's go back over to Safari. I'm just going to take a look at SPY real quick. There we go. Okay. I'm going to start the podcast recording. Let's delete this and then go back here and okay. Good morning. It's Monday, January 23rd, and my ADD is going to be all over the place today because there's so much to go over. I've got top Wall Street bets mentions for Friday, Monday forecast list, Tesla to go over. It is earnings week with huge earnings. Ziptrader, he had 3 stocks that are in short squeezes. Spotify layoffs. Elliott Management took a new position. They're the ones that went into Pinterest and popped Pinterest. JP Morgan, Bank of America, starting a new cash app. I want to go over Avaya, which I told you my friend works at, which probably heading towards bankruptcy, but kind of, the stock. Let's take a look at that one. Boyle, I wanted to talk about some of the energy plays, why I think Netflix is still a buy. DRV, which is our real estate short in the weekly stock pick. And there were tons and tons of cross-ups. If you have TrendSpider, you can use my algorithm to go and scan the energy sector, scan the ARK funds. You can scan any of those using either my market scanner or strategy tester. The strategy tester is the algorithm. But if you don't have TrendSpider, you can sign up using the link below and use code DSP25 for 25% off. But yeah, there's too many to go over. I will go over probably about 15 scans where the stocks should be moving up. They have a bullish direction in the algorithm, so you can take a look at that. I was mentioning earlier that there was a lot of green on my screen when I looked at the daily stock picks core portfolio that's saved in TrendSpider as well. And if you have TrendSpider and want those lists, either the scanner, the algorithm, or my core lists, which I have 5, I think, right now. There's the core investment by Gary, energy names that we trade and own, the levered ETFs, the low-cost Vanguard ETFs, and the spider sectors. And those are ones that you can get access to and scan yourself and just take a look at those types of things if you want the market scanner. My scanner I can save it and share it with you as well. The algorithm is a little bit of a setup, but it's not too hard. So let's take a look at SPY, and I've got SPY screen up on my screen right now. And if you're listening on a podcast and you want to go to YouTube Live and look at these charts, just go to the transcript. You can go to transcript and look for SPY. I think this is my first or second mention of SPY. But you can look for good morning as well, just to try and see when the podcast starts. So just make sure you recognize what the timestamp is on the chart that you want to listen to during the podcast. And at some point in time, I will put together a kind of tutorial as to how to listen on the podcast and then go and look on YouTube. It's pretty simple, pretty easy, but we'll take a look at SPY right now. You're above the 200-day. The 200-day is at 385. You're trading at 396. There is a clear ceiling at 4,000. And 4,000, if we put this right at 4,000, SPY at 400, I mean, that's where you're kind of going is 400. And if I just put it right at 400 here, you can clearly see we hit it here, kind of broke down over it, hit it here, kind of broke down, hit it here, broke down. So until we get over that hump, I don't want to say that this is a upward trending market, because again, you're over the 200-day and you're clearly filling these gaps down below. And there's a gap down below here at 359 to 364. And that's from the October lows. And the October lows are what people are talking about we go back to at some point in time. The Fed is set to raise 0.25%. This meeting, probably the following meeting. We've got huge earnings this week from a lot of tech sector names. Logitech, Verizon, Microsoft, Boeing, Tesla, AT&T, American Airlines, Intel, American Express, Chevron. You've got a lot. Johnson & Johnson reports tomorrow. A lot of earnings that will be coming out. So SPY is kind of up here just on the MACD. It's just above the oscillator, so it's rather high. It looks like it's trending to cross up. The RSI is at 58. I have money in my parents' account that they want me to manage for them. They gave me a bunch of money. I'm not looking to put that money to work right now just because, A, I want to see what earnings mean this week because we had a really good week last week. B, I want to see what the Fed does. If for some reason the Fed goes with another 3/4 rate hike, you will see this market tank down probably to cover this gap. And I do think at some point in time this year, we cover this gap down below. I think you're in a trading range this year. There's a lot of good news out there that people think we're heading into a soft landing. That could be, but I don't know. The one that I wanted to point out to you guys today is Wayfair, symbol W. It was up 22% on Friday. It is up another, let's just see here. I'm looking in Active Trader Pro right now. It is up another 17% today at 55. This chart was clear, and I should have seen it, but the algorithm had you in on January 4th at $33. $33 doesn't mean that I would have automatically gotten you in because it's a downward sloping trend. But now that you've crossed that 200-day, I should have gotten you in at $38 once you cross that 200-day because the gap up here at 52 to 55 was clear. It's covered that gap. Now, when you look at FinViz, which everybody should have access to, it's a free website, finviz.com. Just go and look because January 23rd today, Webbush comes out, $38 price target. We've greatly outpaced that one. JP Morgan came out today, raised their price target to 63. Bank of America raised their price target to 65. You're trading at 57 right now. Those price targets are right up here to fill this secondary gap. I'm not saying that you could do it because you're creating some gaps here as well. There's gaps down just as well as there's going to be gaps up. So I'm not sure where this one goes. You are not making money. This will be either if you buy a lot of things from Wayfair, if you shop online and buy I buy rugs from Wayfair. I love their rugs. I'm looking for a new desk chair. Went to Wayfair and went to Overstock. Kind of compare the two, just depending on what I like. But I like both sites. So I should probably be buying these. The top Wall Street bets mentions for Friday. I took a look at this because, again, I'm getting into that degenerate sector since I started trading GNS on Friday. Netflix was one. Netflix will probably get put in my core portfolio. I haven't added it to the core portfolio. I have traded it, and I've traded it fairly well. But you can clearly see, I mean, if we just go with a three kind of, touching 3 points here, and we start back here July of last year, and we touch 3 points, and then we do a 3-point up top, you're at the upper section of this. I would say if you're at 320 to 330, I think you enter this one. I think it does come back to that realm. But at this, they have $30 billion in cash flow. $30 billion in cash flow. Or I'm sorry, $3 billion in cash flow. I added a zero. What's the big deal? 3 billion, 30 billion. But they have a ton of cash flow. This is the only streaming company that's actually making money. Disney, losing money on their streaming. Warner Brothers, losing money. Paramount Global, losing money. Hulu, losing money. All of those things are losing money. Netflix is not. Another one that I've actually missed, and I talked about this just on YouTube just a little while ago, Tesla. This will be studied in business books for the next 20 years, this year alone for Tesla, because they missed their 50% growth target from last year, but they're currently bouncing off a low of 101, which happened, right here on January 6th. And you can clearly see the volume is just trending upward. It is trending upward. Today it's up 2.7%. Their earnings are coming up Wednesday. The RSI is at 63. This is not one that I would say, hey, get into it, except for the fact that it's fallen so much. At 136, I'm kind of tempted to add back into my position. If you remember, I sold out of all my Tesla and all my ARK in December. I took a loss on the ARK funds. I had a gain in Tesla, so I can buy back in whenever I want. I'm not restricted from the tax loss harvesting that I did. Now, it's important to know the algorithm here, which got you in at 119 before it dipped down to 101. 119, it was in an upward trend. It immediately dipped down, but the algorithm never got you out. Never got you out. And part of that is because the algorithm includes some moving averages, and you can see the 9 and the 21 are crossing up on the 50-day. That's a positive move. It's short term, so it's not considered long term, and you do have earnings coming up. What will Elon say? Will Elon say, hey, I got a new CEO for Pinterest? I've said the day that happens, this one's a 20% popper. I think this one moves from like 130 up to 150, 160. The 200-day is up here at 204. That is still a target because it constantly kind of goes above that 200-day and stuff. There's a gap here between 259 and 265. I don't think that that's in play yet because it's above that 200-day line. But if you look at any of the charts, retail traders have been piling in. Just like crypto, they're piling in to Tesla. And that's what drove Tesla before. Make no mistake about it, Tesla is still expensive. That PE is 41. The forward PE is 31. Earnings per share this year expected to go up 7%. So it's not expected to grow a huge amount. Performance year to date, if you would have bought January 1st, you're only up 8%. But I say only. But this is a huge stock. This was a game-changing stock over the past 5, 7, 10 years. This made many people what's called Teslainaires. And it's the second most mentioned on Wall Street Bets. So Tesla was the next one. Netflix was the first one. The next one, NDA. I don't even know about this one. I'm not even going to go into that one. GNS was the next one. This is one that is in a short squeeze. We traded this one Friday. I got in, I think, at like $4. Got out around $4.80. Mike on YouTube was the legend of Friday, where it went up to $5.50, and we started mocking him because he had paper hands, and he said he got out at $5. Well, most of us waited, and we never got above $5 again. But this is one that Ziptrader Charlie brought up, and he says that it could probably go up. Now, the CEO, here's what you have to know about GNS. It is not worth $4 a share. It is not worth $1 a share. It is probably a bankrupt company. And it pumped down on open. Even with increased volume, it just pumped down. You're looking at expanding Bollinger Bands live right here. The RSI is down at 32. The MACD is way below the oscillator. It just has no strength whatsoever. You can trade this one. I wouldn't own this one for more than an hour. Honest to God, I just wouldn't own this one for more than an hour. It's not worth it, but if the CEO what happened was the CEO announced, hey, we're coming in against naked short selling. There were something like, let me look at my notes, 124 million shares shorted. Okay, 124 million shares shorted. And when you look, they only have a 10 million share float. How are you shorting 124 million shares? And that's what causes the price to spike. GNS is down 6% today. It has no kind of bones about it, but the only reason it pumped was because the CEO said, hey, we're hiring an FBI agent. The next Wall Street bets is Bed Bath & Beyond. This one I played as well, played for a nice gain. It's got no momentum whatsoever. It's coming down. The volume's coming down. People are just less interested in this one. They've said, hey, we're going to sell the business. We're going to break it up and sell our baby business. They may avert a bankruptcy if they're able to do that. You got a gap here between 209 and 250. 209 to 250. You're trading at 322. There's no reason to get into this one. It is just not, again, if you want to play those short squeezes, don't hold them for more than an hour. If you have a full-time job, do not get into these names. Do not buy and pray that these are going up. Google is one that was a top name on Wall Street bets. This never happens. Google, Microsoft, Apple, and Amazon are the next ones. Google, we trade GOOG, and the reason we trade GOOG over GOOGL, GOOGL has voting rights, but you will never, absolutely never get a vote. Your vote will not count. You may vote, but Larry and Sergey own so many shares, you're never going to trounce them. And they will change the rules several times so that they'll continue to hold all the voting rights. News over the weekend is that Larry and Sergey were called in because ChatGPT, the AI in that, is game-changing. And with Microsoft putting money into it, they're afraid. So they're kind of being asked, okay, where do we go from here? But Google is one that the algorithm had you buy in around 90. Anything under 90, legend buy. Anything under 100, it's a good buy. I'm telling you, when you go over to FinViz, just look at the PE on this one. Remember the PE on Tesla was 30, 40. The forward PE was 30. This one's 19. Performance year to date, you're up 11%. The 52-week high is 152. You're 34% below that. You're only 18% above your 52-week low of 83. This is one where the earnings per share, if we go into a recession because advertising will go down, this one might get hurt. So if your outlook is 1 year, I don't know that you necessarily trade Google here because your RSI is at 77. Your MACD is crossing up. I mean, it's just way up above the oscillator historically. And your earnings are coming up next week, February 2nd. So I don't know that you necessarily trade this one, but the earnings could be a catalyst for this. It could also be where they bring their earnings down. And you could see this back in the 80s. So make your determination what kind of buy you want. But Google is definitely a name that I would say if you're going to add to it, add to it. Add to it now. Anything under 100, I think, is pretty good. Microsoft is another one. The Wall Street Bets crowd was mentioning. And Microsoft is one, I say anything under 240, just buy it. Don't try and time this thing. Don't think that, hey, it's going to go down to 228. They put $10 billion into ChatGPT. They're laying people off. They're cutting their business. They're going to grow. They're a good cloud company. They have Xbox. They're trying to complete that Activision Blizzard They're fighting that in court. You're just crossing up on the 200-day. I would say probably wait till under 240 to get it. Right now you're trading at 241. It's up 0.63%. Put in a buy for 239. Say you want one share, just buy 100. One share. Somebody was telling me, well, I only have $50. I can't buy a share of Microsoft. Bullshit. You can buy $5 in Microsoft if you want. It's called fractional shares. Just buy it. I mean, again, you don't have to buy a full share. That's what I'm doing in my $1,000 Webull account. I'm just buying small shares. I have to be careful because I'm under the $25,000 limit, and I'm pattern day trader. So those little buys that you see me do on GSN and other, Bed Bath & Beyond, I should be doing that in my Fidelity account, not in my Webull account, just so I don't get caught in a trade. But if you are in under $25,000, in an account under $25,000, do not day trade unless you are sure that you have trades to get out of a risky position. The next one, Apple. I just went over Apple for the folks. Apple is 25-40% of my portfolio. I don't even count it. It is the large majority of my portfolio. It is in this ascending triangle, ascending wedge, whatever you want to call it. It's breaking out of that today. Anything under 140 in Apple, I think you're getting brought up to 150. If you want, just tune into the YouTube channel and type in Apple. I have a great look at that one. You're covering this gap up here up to 140. It's at 139 right now. You're covering it. I mean, it covered it on its way down. You just covered it on its way up. The 200-day is up here at 143. I would expect us until next week when you have the Fed meeting and Apple earnings, I would expect it to be at about 140, 145. And then they're going to announce something, and it's going to probably drop. I have a feeling the fourth quarter was worse than expected. And so we're just in this drive up, and then you're going to see it drive back down. So I don't know that I'd necessarily wait if you have a 5-year time frame. If you have a 1-year time frame, I'd probably hold out. I just can't. I don't see all the optimism that people see. I just don't. Amazon is the next one. You're up 0.05%. I mean, Apple's up 1.42% today, by the way. It's just soaring. Amazon, you had this cross up here at 83. You're at 97. That's an enormous move in a stock. And that was December 30th. So what? You're 23 days and you've made almost 10%. Almost 20% of your money in this one. And it's a stock that, honestly, don't be shy from just holding this one. I mean, you're going to come up to this 200-day, which is 103. You're probably going to come up to 100 and kind of bounce off it. Their earnings are next week, February 2nd. So there's your look at Wall Street bets mentions for Friday. Some of the names that I didn't go over that are on a watch list. Upstart. Upstart is just a trade. This is not a company that you want to own. The algorithm has you buying in at $12.72. You're at $18.13. I think you come up to this 200-day at $20. I think that's your top range, but that's a 10% move. So I think you could probably get into this one and look at that. The problem is, again, this is just a play, and it's a hypothesis. There is no reason to think that that's going to happen other than we're in a pretty good upward trend. You're above that 9-day. I saw this one, and I said, this might be a good play. If you're trading options, I think that's a better strategy to make more money. You could lose more money. Understand that just options are a little bit more risky. PayPal. There was a report this morning that JP Morgan, Bank of America, Wells Fargo are creating a digital wallet to go up against Apple Pay, Google Pay, PayPal. And Zelle was supposed to be that. I have Zelle through my bank. I mean, I use these digital wallets. I don't use Apple Pay exclusively. But if JP Morgan, Bank of America, and Wells Fargo are going into a wallet, you best believe their members are going to be using that wallet. So I would probably look at getting into those banks. JP Morgan, Bank of America, we've talked about. It is in the core portfolio. And Bank of America here is right up against the 200-day. Just got you out with a 4% gain. The RSI is in no man's land at 45. The MACD is kind of crossing down. You had your earnings. Banks probably are just on too much of a run right now. I'd say that you probably come down to this 50-day. You had this death cross, but the 50-day is now positive at 33.38. You're trading at 33.84. I think this is a $40 stock at some point in time this year. Just my guess, but I think it is. But if we go back to PayPal, this is one that I personally own at a significantly higher price. I think it's around $200. Embarrassing to say. But the algorithm got you in at 68. You're at 78. There is a gap down here, 73 to 71. But you are in an upward trend that took a little break, and you're starting to get some confirmation again. That's why I say there's this gap here that starts at 79 to 82, which is right about where the 200-day is. That's why I kind of bring it up. Their earnings are coming up next week, February 9th, maybe 2 weeks from now. The RSI is in no man's land. Again, I don't know for sure. I'm just kind of saying, hey, this one could move, and you want to keep your eye on it. Carvana, this is a short squeeze. And by the way, my podcast is brought to you by Carvana. The Carvana is the sponsor on Spotify. Ironic, it switched from, and I think Melly is the sponsor in Mexico still. But someone will have to tell us. Okay. RSI is at 60. This is Carvana. I mean, it's a short squeeze. Again, don't hold it for more than a few hours. I could trade that one. Coin. We've talked about crypto being crazy. I've traded Mara, and I'll look at that one as well. Coin is one that has had a huge bounce, 35.19, which is right here, December 23rd in the algorithm. You're at $54. $54 a share, touching this 200-day. This is one that I would expect to touch the 200-day like it did August, like it did in September, like it did in October, like it did in November, and then just break down. So I wouldn't expect this one to continue going, but with Bitcoin up above 23,000 this weekend, it's crazy good, and Coin is a way to play it. You could also play Mara. Mara is one that I traded, I think it was last week or the week before, $3.90. The algorithm still has you in at $8.21. You can see that it touched that 200-day at about $9 and then just broke down. And it came back down to about 7, back up at 8. To break through that, you're going to have to see a pretty good move in this one to break through that. We'll bring it back here to the highs, and you can see a volume shelf that kind of is up here at $10. So I think you do have a catalyst to move up there. You're just going to have to see a pretty good move off of this $8.82. But it's up, 2% today? So it's a pretty good move. I talked about Ziptrader shorts. GNS was one. LYT is one. This is the same kind of thing. And Hellbiz, HLBZ. Charlie believes that these could move. So if you're trading, day trading within an hour, those are ones. COSM is one as well. Elliott Management took a stake in Salesforce. They're saying it's a friendly stake, but this is the same company that took a stake in Pinterest. And we'll look at Pinterest after this. CRM, their earnings are coming up February 28th, so it's later in the month, next month. The MACD is crossing up a little high. This one has had you in, the algorithm's had you in since 135, which is a great buy. You've crossed the 200-day. You've got the 200-day as support level at 148. So if you're buying this at 153, I would say 148 is probably the one to kind of hang out there. And you've got this move of the 50-day. If you get a golden cross of the 50-day above the 200-day, remember what happened here. Take a look. August, it just moved up and then came right back down. And that's what I would be nervous about here. The one good thing that you have is Elliott Management took a stake in it. And Elliott Management took a stake in Pinterest as well. And we can look at the day that Elliott Management took an interest in Pinterest because there was this gap. I think it was back here, I think, November. And so that gap down here at 21, today you're at 26. So Elliott Management knows what they're doing when they take a stake in here. Spotify announced layoffs. Spotify is the host of this podcast. They give me advertising dollars. I think I make, and honest to God, I guess if people are buying State Farm insurance, if people are buying Carvana, it makes sense. I don't know. You guys will have to tell me. But they pay me somewhere in the neighborhood of, but depending on how many people listen, anywhere from $2 to $5 or $6 a day in advertising revenue. And that's what they share with me. So I don't know that they necessarily are making money, because that does seem like a lot of money to pay someone like me. And if they're paying me that amount of money, what are they paying others? But they did announce layoffs. And the CEO said, hey, we overspent on headcount. Their earnings are coming up January 30th, so next week. It'll be interesting to see, or hear, I should say. You've got this golden cross coming up here. About 86 is where the 200-day is. The 50 days at 83. If you get that golden cross, that could be a bull. The algorithm had you in December 21st at $78. You're at $100 right now. You've got this gap within kind of range between 106 and 109. Trading at $100, it might be worth thinking that, hey, I might be able to fill this gap if their earnings come out with something good. If they raise their guidance, make no mistake, go into FinViz. This company is not making money. They are spending money hand over fist. I do like the CEO. I like their vision. Year to date, you're up 24%. You're down 51% from your 52-week high, 45% above your 52-week low. So you're right in the middle of this trading range. I use it. I haven't bought into this. I don't know why. I just don't know why. Avaya. We talked about Avaya because my friend actually works here. And we talked about it having a pretty good catalyst here around their last earnings. And I think it was, I think it was, no, it was December. It was December where it was trading around $1. And I said, hey, there might be some good news. It was bad news, and it continues to be bad news. So I wanted to bring this up just because I told him I would. But Avaya is not a buy. Let's look at Boyle. Boyle and KOLD. Boyle is up. Let me just check Active Trader Pro to see where Boyle is. This trades on the futures of natural gas, and it is up 8.8% at 1017. It got to 1019. So it's trading at its day's high right now. It is up. You can see it is still not. I mean, this one had you in at $14. Still has you. It got you out the next candle. Still doesn't have confirmation. Doesn't say, hey, this is going to run huge to me at all. If you're in the Northeast, if you're in the South, we've had an extremely warm weather. You can see the volume. See that blue line? That's the daily average volume. Look at how low it was here when it was pumping. Now it's gotten some kind of rejuvenation, but it still hasn't been enough to push the stock higher. All you have are traders here. And when you pull this to its most recent highs, which was November, the entire volume is down here between 12 and 10. I mean, there's nobody holding this up here. There's no volume level that's going to pull it up. There's no catalyst on this. You're heading into summer. I would be very wary of buying Boyle here. On the inverse, KOLD has had all of the volume decrease that Boyle has. People are just betting on Boyle. And I don't like betting. I don't think the betting, creates anything. But the December 19th, $17.40. I mean, I was talking about this November 29th at $12. You're at $41 with confirmation. It's not breaking down. It is still above that 21-day. It's touching the 9-day. If you've got profits in this, the RSI is at 60. It's in no man's land, obviously super high. The MACD is crossing up on this crazy level. But this one is just in a range where it makes sense. Doesn't make sense to bet against it. Right now you're starting to see the beginnings of a button hook. But does it button hook? I don't know. I mean, that 200-day just started moving positive. The 50-day bounced off it and just soared. So if you look at the volume perspective, we bring it back here. All of the support level is between 14 and 13. Nobody's buying up here, at least not in huge volumes. The people down here are still holding. So that's where people are holding. If that's where people are holding, then you can assume that this one is probably still going to go up because they're not selling. The majority of people are holding down here. So I just, again, people have asked about Boyle, blah, blah, blah. Weekly stock picks. If you don't follow him on Twitter, follow him on Twitter. I think it's My Weekly Stock. He has an algorithm that is based on the Dow, based on momentum. This week's pick, again, is CAT. I think it's been the past 3 weeks. I got in last week, small position, lost money last week, but CAT is one of those you don't mind holding. It is expensive. Just mind you, his algorithm is based on Dow, I believe, so it's only 30 stocks. The PE is 18. If you look at industrials, their PEs are just not super, super high. I mean, look at American Airlines. We can look at this PE. I mean, it's 9 forward PE. They're reporting next week. But his pick is CAT. And you can see from CAT, there is this gap at 198 to 208. You're trading at 249. There's a volume shelf here up here between, I'd say, 225 and 240. That is fairly strong to support it from going down to that gap. And the gap is from the earnings back in October. You've got earnings coming up January 30th. So this later or early next week. Again, I will point out, I'm going to start going over my scans now. Oh, let's look at DRV. One look at DRV. DRV, it has this cross up here on the algorithm. And if you don't know, this is a 3-time bear on the real estate sector. So if real estate starts crashing, this one will go up. The algorithm on January 20th last week crossed up at 45.95. You're trading at 44.91. Doesn't mean that you should get out if you're in. If you're uncomfortable with it, the day after it went all the way up to 46.08. 47.87. So you went from 45 to 49, a nice 5% gain, 6% gain, somewhere around there. It's triple levered. So you have to be sure that you're comfortable with this. For instance, I got in at SQQQ at, I think it was 48.20, and we're down at 43. I think it was 48.20. I saw this button hook, and I'm like, yeah, 47.96. I got in at 48.20. I kind of timed it. This got you out with an 8% loss. I'm probably at an 8% loss now. It's a small position. I just did it wrong. The RSI is down at 32. So DRV, though, is an interesting one in that I don't know that I necessarily believe that the real estate sector is going down. I think it was KB Homes or somebody came out, or it was DR Horton, came out with pretty good earnings. So the 50-day is kind of moving a little bit up on DRV, but it hasn't made a bold move. The 9-day is trending down. The 21-day is trending down. The 200-day is still trending up. So your long terms are still trending a little bit upward, although the 50-day is kind of moving. So you're kind of in this no man's land. I don't know that I would take a side on this one just yet. I bet on SQQQ and I bet wrong. And I'll probably sell out of that one. I'm in my small Webull account. So it was super small buy. I do have to, as I'm going into scans right now, I do have to mention, if you have TrendSpider, go and do the scans for yourself. There were a ton of ARCs. There were a ton of NASDAQ 100s that crossed up and present buying opportunities. One that is in our core portfolio is Qualcomm. This one is a secondary cross-up. The first cross-up happened on December 30th at 107. I've said anything under 110 on this one is a fantastic buy. I think I've said 170 was a great buy on this one. I think I said 150 was a great buy on this one. I think this is just one that you buy and hold. It's got a good dividend to go along with it. So you look at Qualcomm on FinViz, 2.44%. The PE is not crazy at 10. Not crazy at all. Year to date, you're up 11%. Your 52-week range is between 101 and 192. So you've got a good opportunity to get in here. 128, the RSI is at 69. Their earnings are coming up next week, February 2nd, right around all the other tech earnings. Their ex-dividend date is March 1st. The MACD, is, again, it's a secondary cross-up. Big move. Created a gap. If it doesn't get down to 123, you created a gap here. So I don't know that I'd necessarily get in here, but you're above the 200-day. Your 50-day is moving positive. Your 200-day is starting to turn. Your 9 and your 21 obviously are huge, huge positive. XLK, Spider Technology. This is one that I personally own. I don't trade this one. It got you in at 123 on December 30th. This is a secondary cross-up. Huge secondary cross-up. Your RSI is at 66. A little bit strong. For you, but it's above the 200-day. I would say if you're looking to buy this one, I would probably wait till it gets back down into the 127. But technology has been on a move, and with XLK having secondary cross-up, you could see a secondary move on all the technology stocks. It's just an interesting one. Square has a secondary cross-up in this ascending triangle, and you've broken out. 78. Now, there is a gap up here that's under the 200-day between 81 and 84. You've obviously got this triangle, and you've broken out. You're above the Bollinger Bands. The RSI is at 70. Kind of crazy to think that it could still run, but this is one that has just been beaten down so much. All of these advanced pay services, Square, Block, I should say, PayPal. Its 52-week high is 149, and you're 47% below that one. Now, it's not making money. Its forward PE is 44.51. Their earnings are coming up on February 23rd. If they announce for some reason that they're making money, holy crap, get ready for this to explode. And the market has exploded up, by the way. Wow, I'm seeing big moves in Costco, Apple, Devon Energy. I'm seeing a big move in Moderna, 2%. PanW, which is Palo Alto Networks. Qualcomm is up 4%. Shopify is up 6%. TSM, Taiwan Semiconductor, up 3%. So, and this is just live. But your next move in my personal portfolio that I own is an ETF, iShares Expanded Tech Sector ETF. This is IGM. Gary Mary. 276 was the cross up. And you are up at 305, 306, just above the Bollinger Bands. It's crazy big move. I don't know that I'd necessarily buy down here. You just crossed the 200-day. But I do own this ETF. It's got a pretty good dividend from what I remember. Let me see. 0.49%, so it's not crazy. Year to date, you're up 8%. It's 24% below its 52-week high of 407. So I've held on the way down. I'm not trading this one. I buy and hold. This is one that I just buy and hold. VEA, which is Developing Markets. This is part of our Vanguard watch list ETF. And this one had a secondary cross-up. The initial cross-up was December 29th at 42.45. Right now you're at 45. It's a secondary cross-up. The RSI is super high. I don't know that I'd necessarily get in this, but if you believe in the developed markets, this is one that you just buy and hold. Let's see, VEA. Let's see what their dividend is. 4.39% dividend. So it's just one that's going to compound. You're going to trade here probably between, I'd say, 30, 40, and 45 during the year. It's probably going to just continue up. Another one that is a Vanguard that had a cross up, Vanguard International, VXUS. This is a secondary cross up as well. Had a couple of buys here at 52. You're up at 56 right now. The RSI is at 76, so it's super expensive. This is one, let's see, VXUS. let's look at the dividend, 4.54% dividend. So pretty good dividend on that one too. Some of the spider sectors that crossed up, we talked about XLC Communication Services crossed up. This one had a buy-in at 47.65 back on December 27th. You're at 53 right now. So you've had what, 11, 12% move in this one? In an XLC. This is a secondary cross-up. The RSI is at 74. I would probably not get into this one. I did bring this one up before. I thought that it had a lot of momentum with it because it was above that 9-day. It crossed the 200-day. I said at 47, I would be looking at that 200-day. If it doesn't have confirmation and close above that 200-day, I might look at selling this one. I probably would have sold it at this button hook, but it's taken off even more. So again, none of us are perfect. None of us, if anybody tells you they know where the market's going and they know that a stock is going higher, either they have insider information or they're just BSing you. Palantir is one that I owned. I took a loss on this one. I'm still restricted from trading it. December 29th, about the time that I sold it, 645 was its buy-in. It's crossing up here on a secondary cross at 715. I don't know that this one's necessarily a buy because it's basically putting in lower lows. So it's on its way down. It got a cross up. It's still on my list. That's the only reason I bring it up. Another one, the only reason why I bring it up is Splunk, SPLK. It's in an upward ascending triangle, a wedge, if you will, and it's kind of breaking out above that. It's held its 200-day ever since January 9th. It had an $89 buy on January 9th, and this is a secondary one right here at $90. It's kind of in this range. I don't know that I'd necessarily buy it here, but I wanted to point it out that it is in my list. It's been brought up before, and you probably made some money on it if you have bought it. But Splunk is one. They're not making money. I had a friend just leave the company. Didn't speak very highly of it, but knows that the management team is incredibly focused on money. Let's just put it that way. Bionano Genomics. This is part of the ARK Fund. And this is one that $1.42 on December 30th. The RSI was down at 33. You had to go up. It's a secondary cross up here. The RSI is at 59, so it's not super high. It's just probably going to get to that 200-day at $2, which again is a 20% move. So, I'm sorry, a 10% move. So you've got an opportunity here. Do I think that it's going back up to the $3.50? I don't know. Look at the pump. I mean, the pump with that day volume, that's where it went. You could have it again. But BNGO is one. MGNI, Magnite. This is another one that is an ARK, and $9.92. The algorithm loses you 70%. Buying and holding loses you 73%. The reason why I bring this up is you win 25% of the time. Your average win is 9.59. Since you had this loss, there is a chance that this goes back up. I mean, if you're using this 200-day at 879 as your bounce, if it gets down here, there is this gap between 719 and 586. Could fill it, but your earnings are coming up. So I don't know if you want to research that company. It just came up. One that I do think might be a good buy just because the timing is Intuit. Intuit crossed up here at 397. Now, the algorithm loses you 13%, whereas buying and holding makes you 4%. You win 26% of the time on your candles, your 32 positions. So 26% of those 32 positions you win. Your average win is 10.69%. So there is an opportunity. You just crossed your ex-dividend date, which was on January 9th, but your earnings are coming up February 23rd, later next month. Now, you do have, if you pull this back to its recent highs, you're in this trading range, and you're just kind of hovering around this 200-day, and it's using that 200-day as its resistance level at 402, which is where it's trading right now. If you cross above that 200-day, and do your research on this one, the 415 is definitely in range, and the 430 to 450 gap is in range as well. But Intuit's an interesting one because it is tax time, and if you do your taxes with TurboTax or you use Mint.com, either one of those, there's an opportunity. We brought up Constellation Energy, I think back here in November. It's a utility. This is one that I used as my gas company. I disconnected from them. They couldn't beat it. You have the death cross. And in a utility where you have the death cross, see back here in July, you had the death cross and it wasn't that long. And then it just took back off. So the question is that trend going to be the kind of what you see here? It is expensive. CEG is expensive. It's not making money. Its forward PE is 18. Hold on. I just typed in wrong. CEG, it has a 0.68% dividend. Year to date, you're down 3%. You're only 15% below your 52-week high. You're 100% above your 52-week low of 41. So do your research on this one. January 17th, RBC Capital outperformed market sector with a price target of 91. You're trading at 82. So if you get back to the 91, all they're doing is saying, hey, it's around the 200 day. That's where it is. Let's look at C. This is the fun one. To quote South Park, Shitty Group, which is symbol C, a bank. Secondary cross up. After earnings, you've got pretty good. I mean, it's solid above that Bollinger Band. The RSI is high, 75. But banks, in my mind, again, are pretty good. On the core portfolio, I'd rather see in Bank of America. It's just a better run company. BAC. BAC its PE is 10. Forward PE of 9. Dividend is 2.6. You're 32% below your 52-week high. You're 15% above your 52-week low of 29. I don't think you can time this one, but $33 seems like a pretty good one. Conversely, the PE on Citigroup is 7. Their dividend is 3.9, so you're making more. Performance year to date is up 12%. So you could bet on the turnaround here, kind of like I did with Wells Fargo. And I'm not doing as well with Wells Fargo. I think I bought in at $42.50, somewhere around there. 2% dividend on this one. The PE is 13, though. And they've got a bit of a bigger turnaround than Citigroup does, but year-to-date performance is at 6%. Citigroup probably was the bet, but you've run a lot. And you're above that 200-day. You're just getting the Golden Cross right here. So the Golden Cross happened on a day where it was actually down in the 40 range, 48. I don't think you're getting hurt at 50, but it's something to think about. So, okay, great questions today. Long podcast, but it was due because we do have I didn't even get to the earnings this week. Your earnings, Verizon is tomorrow, Microsoft is tomorrow, J&J is tomorrow. You got Boeing on Wednesday, AT&T on Wednesday, Tesla on Wednesday, IBM, which was the stock of the year last year, the tech stock of the year, Lam Research on Wednesday. You got Southwest and American Airlines on Thursday, Intel and Nokia, and you've got Chevron on Friday, which leads off the energy sector. You've got American Express on Friday. You got Charter Communications on Friday, which had a cross up. So you do have opportunities in this market, and this week presents a good opportunity. I say, the market's not really telling us a whole hell of a lot. We had a good week last week. You got the Fed meeting coming up, and you have what's going to lead the market are the tech sector. And so Microsoft tomorrow is going to be a key factor. Texas Instruments going to be a key factor on Tuesday as well. So take a look. You have opportunities out there. I gave you a whole bunch of ideas. If you have any questions, hit me up on the socials. If you made it this far, rate the podcast, hit the 5 stars on Spotify, go to your library, go to shows on Apple Podcast, and then hit the 5 stars up there. I could really use help over there. If you're on YouTube, hit the thumbs up button, hit subscribe. I hope that you guys share this one. I hope that you guys enjoy it. I'll be on all this week. I do have on Wednesday a meeting with TrendSpider, and we're going to be recording it. So if you're subscribed to TrendSpider and you have any questions that you want to ask one of their educators, just let me know. We're going to be going over the market scanner, the strategy tester, some of the how to set up groups, your own kind of watch list, how to scan multiple watch lists, some of the indicators that I don't use. I've asked them to kind of go over as well, because there is a lot more to TrendSpider than what I actually show you. Significantly more than what I show you. Ooh, Cleveland Cliffs is coming down here towards 20. So if you have any questions, hit me up. Okay, take care. Share, export song to disk. And at some point I have to go check on the dogs. Okay, let me look at your questions. Morning, Dawson. Morning, VRO. Alberto, I love you, Grandpa. Grandpa? Albert, I ain't got no kids out there that I know about. Was that a Tijuana trip that I took that I don't know? UNH, I told you to get in last week. I got in last week. Let's look at UNH. It's in the core portfolio. The only thing, so here's what you have to know about UNH. If we go into a recession, UNH is great. If we don't go into a recession, if for some reason, the Republicans are able to reduce spending on healthcare, from Medicare and stuff like that, which I don't know that they're necessarily focused on doing, but they've threatened to do, UNH can take a hit. So, but I like, my position is at 485. I think I timed it around this 487.76. I got in around this time. 494 I didn't believe in, so I got in right around this time and tried to time it because it got you out right before this. But, you got your secondary cross-ups. Your earnings are done. It's just, what the earnings are going to be. It's a solid, steady, well-run company. I like it. Tijuana. That may have been in my drinking days if Alberto is still here. Alberto, you better be subscribed, though. Let's see, HCA. Yeah. God, look at that chart. Let me look at FFIE. HCA is, they report Friday. UNH, their PE is 22. I thought you liked Cigna, though. Yeah, see, this one still has room to run. The problem with United Healthcare is their PE is just so high, and it's run into that. But it's a well-run company. Yeah. I own it for the long term. I don't think you're going to get burned by it, but, later this year, does it come down to 480? Maybe. Who knows? FFIE. Sherry? Let's look. Faraday. Oh, this is the car company, I think. What news do they have? I hate healthcare, though, James. As an unemployed person who relies on non-employer healthcare, I fucking hate healthcare. I hate it. FFIE is an interesting one. It covered this gap. You're above the 200-day. They're not making money, though. I can guarantee you at that stock price, they ain't making money, no. Sherry, that's a trade. You're up. Year to date, you're up 111% on Faraday, though. What a great freaking trade if you could time that one. But I think that's the market in general. Is, you look at GBTC. What are you up year to date? No, GBTC. It's not even pulling it up. Urgh. Look at, what's another one? Wayfair. Wayfair is a good example. You're up 42% year to date. Brandon, I used to think that too. You'd be shocked at how bad healthcare coverage is from the Affordable Care Act. I will tell you what would fix it, and nobody's going to fix it because there's too much special interest, is Medicare buy-in, which Biden promised to look at and hasn't, which is part of the reason why I'm not a fan of Biden. There's many other reasons, but one of the reasons I was hopeful for him because he said he would look at potential Medicare buy-in. For instance, I will tell you, so my health care costs me $500 to $600 per month. It's a catastrophic plan, which means my deductible is $9,000. I don't get any help from $0 to $9,000. Nothing. Zero. When I get to $9,000, I think it's 50% paid. And this is all within network. And the problem with Affordable Care Act stuff is if I go out of state, there's not a lot of network. There's not a lot of network. So essentially, if I spend on out-of-state healthcare, like say I go hiking in Colorado, and this has happened where, I break a bone or I actually wound up getting snow blindness and I had to go to emergency care. I don't get a thing from that. It was, I think, $400 for a half-hour visit for them to tell me, well, you got snow blindness. There's nothing we can do. But yeah, $500, $500 to $600 a month. I think it's five and change. And out of pocket is $9,000 before I get anything. And then it's 50%. So yeah, stay in your jobs. I mean, this is another reason why I tell people you got to have a lot of money to retire in this economy. I do believe, here's the thing about hospitals. I know people that work in administrative positions in hospitals. I do believe that they lose money. And the reason they lose money is because they can't turn away patients. And when you can't turn away patients, you get people without health care who are homeless. And I loved, by the way, the description. I listened to All In podcast. If you guys don't listen to it, it's fantastic. It's a bunch of billionaire buddies who just talk to each other about random stuff. And David Sachs, I think his name is on there. Huge conservative. I tend to kind of, I like him a little bit, but I then kind of go, he votes conservative just to vote conservative. So I have a problem with him. I don't think that you should vote conservative just to vote conservative. I think you should have a mixed belief, I'm a middle of the road kind of guy, but he brought up a good point, and it's specifically San Francisco about homelessness. And there was a video and it was a horrible, horrible video of a store owner basically hosing down a homeless person, just spraying them with water. And because the homeless person had set up camp out in front of his business, and it was an art business, and he couldn't get the police to get them away. Well, I feel bad. I feel bad for the business owner, and I feel bad for the homeless person. But I think that there have been a lot of studies of the homeless epidemic, and they brought up a great thing on the All In podcast is it probably shouldn't be called homelessness because it's not homelessness. It's mental health crisis, because the large majority, I think it's 90 to 95% of people who are homeless in this country have some type of addiction or mental health issue that causes them to be homeless. And so if we treated the way if we didn't treat it like homelessness and treated it for what it is and provided resources going towards what it is, we might be in a better place. So But if you want, listen to the All In podcast. I think has Microsoft in the title. It was a great discussion by people who are way more informed than I am about a lot of these things, because they are in the upper echelon of decision making in this country. And VROA, if you become a politician, get me into your board, because the other thing that they discussed was what's his name? The guy who's in who's in charge of Citadel. And if you don't know Citadel, look it up. But they, the trading house, if Ron DeSantis is voted in, and I'm not a DeSantis fan whatsoever, but if he's voted in, this guy Ken, who is in charge of Citadel, who basically wound up bankrupting, getting Robinhood to stop trading on GME and fucked up the markets, but probably saved the country. He probably will get Treasury Secretary nominated because he's donated to DeSantis and he's such good friends with DeSantis, and he's asked to do that. Here's what the discussion was, and this is funny. And this is Mnuchin, 100% Mnuchin, who I didn't like whatsoever. He did some shady shit as Treasury Secretary. Just as I'm sure Janet Yellen probably has some shady shit in her past as well. But you get to basically cash out. So say this guy Ken, I forget his name. Hold on, let me look him up. Ken Citadel. No. Oh. Ken Citadel. Ken Griffin. So this guy, you basically, when you get a position as a secretary in the United States government, you can tax-free cash out your positions. He is worth $32.2 billion. That probably is 30 to 31 billion of that is probably taxable, that he hasn't paid taxes on yet. And so if he gets appointed Treasury Secretary, he'd just have to hold that position for a couple of days and be able to get out of that position completely tax-free. And that was one of the bets, is that if DeSantis is voted in, he would get that. Yeah, Brandon, $3,600 per person on my plan for PepsiCo, but that's a year, $3,600. And I agree with employers. See, here's the thing and I think employers, my buddy owns a company, and one of the things that I kind of advised him on was, I think it's a benefit to you to cover health care for families, because that's the person you want working for you, because they're a little bit less likely to jump ship. And he can put more money into benefits rather than pay the employee, because I think people are looking at that as a little bit of a benefit. Like, for instance, hey, we'll cover the employee 100% and then pay 50% of whatever family you got. And so he's kind of moved to that. It's a small company, but yeah, and I'm the best employee to fucking have, because I'm it. You're not covering my family on benefits. And I used to bitch at my employers. You should be paying me more because I cost you less. Yeah, VRO, I'm right in the middle. DeSantis has some decent ideas. He's just a shitty person. He's just a really shitty person. And he wants to be combative. He just wants to be combative just to be combative. I just don't like him. I mean, he's just a bad person. Yeah, homelessness is not the problem. I think it's mental health is the real problem. Okay, I got to switch you guys over to, let's look at Active Trader Pro, and we're going with Sherry's FFIE. Look at Boyle. It's just kind of breaking down. It's just breaking down. Whoo! Look at FFIE. Sherry's right. Man, I think, Sherry, you kind of told us this but is it halting? 34% short interest. Wow. Let me upload this. You guys take up a lot of my freaking time. I found that out last week. Let me go to Anchor. I'm going to upload this podcast. Oh, new episode. Nice job, Sherry. That's what I like to hear. I love it when people make money. Sherry, it's a trade, not an investment. Realize that. I think you just started listening, and there's a big difference between the two. Don't fall in love. Don't think it's going to make it to $1. Take your profits when you can, because that will easily be back down at, let me look. Let's look at a 5-day. So you're getting a pump. You got a pump here down from the volume where you were at 62, and you went down to 60. Then you got to pump up in volume a little bit here at the open. Then you went down. You got a huge pump today. And it's based on volume. Look at the volume just trend up. Look at all the volume on Friday. Nothing. But then this morning you get that. Shit, I'd be selling at 70 right now. You know, Mike would have sold at 72. I'd have sold at 70. Yeah, but here's the thing, Christian and VRO and you guys. We're at 10:45 in the morning trading fucking stocks on a Monday. We're the people that they don't really care about because we're not contributing to society. And we're not. Brandon is. Brittany bitch is. He's got a job. I'm not. I am not contributing to society. So here's my big prediction, and this is, I think, and this is just my thing, I think Trump will win the Republican nomination. And I think, Dawson's at work too. Yeah. If you have a job, shout out. If you have a job, subscribe to me because I'm going to need support. Man, Ford is way up too. Holy shit. Hold on. I'm doing an indices check just so I can. You are being targeted, man. I need support in my old age. I keep telling my friends that. I'm going to run out of money and need support. I am up 1.58% today. But that's all Apple. I'm sure it's all Apple. Let me look real quick. Apple is up 2.36%. So that's what's driving my portfolio. And I got to tell you, fuck, man, Tesla, we missed the boat on Tesla. It's up 4% today. It's hitting that 140 mark. Simon Property Group is up 0.3%. Snowflake is up close to 150 again. That was at 125. Shopify's at 43. Roblox is up 2.63%. Yeah. William, I will tell you, I have a special place in my heart for people who work overnight. And the reason is I used to work, have to go to India every now and then. And we had to work overnight at India. And it was your body. I mean, after years of working the regular kind of, 9 to 5 kind of shift and then going over to India for 2 or 3 weeks, after those 2 or 3 weeks, your body my body shut down. Honest to God, it was just shut down. I'm going to copy this. And we're going to copy all these. And if you're, by the way, if you're on YouTube, hit the thumbs up button. I haven't said that in 10 minutes, so hit the thumbs up button. I'll look at Microsoft in a little bit. Let me finish this. Let me post this podcast. Earnings Whisper website weekly earnings. Okay. I got to put in all of my dollar symbols next to these so that I have them. I don't know what the hell NDA is, but I'll keep it in there because it was on Wall Street Bets. Ones I didn't go over. By the way, Tsla, just so everyone's aware, and I should probably show you guys this. Here, we'll go back to Safari and we'll go to Tsla. It's touching that. It just crossed the 140 mark. So it's in a major upward trend right now. But let's go to a daily because I want to show you. Well, maybe it's not. So here you've got if this is an if this is a shoulder and this is the head, so this is the head that's forming. If we're going to do another shoulder, you're going to get up here near 300 again. This is what's kind of setting up to be, is this an inverse head and shoulders? Now you might say, what the fuck is an inverse head and shoulders? Well, let's go to Investopedia. Inverse head and shoulders. Head and shoulder. Inverse head and shoulders. What the pattern means in trading. An inverse head and shoulder, also called head and shoulders bottom, is similar to the standard head and shoulders pattern, but inverted with head and shoulders top used to predict. Here, boom, shoulder, head, shoulder, breakout, shoulder, head. We haven't even formed it. If we get another shoulder around this area, you're going to 400. VRO, look at that daily. Look at this. The problem that you have is as far back as the volume goes. And again, volume is just kind of, where are people holding at? And if I go to a weekly to try and even pull it back further, you're looking at this kind of being the gap area. And so if we bring it back here to the pandemic lows, where's the volume at? It's down here. So I do think that $80, these are all the Teslainaires that are holding and other people. If you bring it here closer to where it was trading at $80, so we'll bring it here. You just don't have volume down here. You don't have any volume that's really justifying it bringing it down to $80. And so, you didn't have a lot of volume on the other charts either. But on a weekly, you haven't even broken the 9-day. You haven't even, you're below the 200-day. So I think you could touch this 165. Now, if we go back to a 4-hour chart and we look at that 165 level, where's that 165 level? It's right here. So you would start to kind of almost put in a shoulder here. And I've talked about this before where the 4-hour chart is better than the daily. I don't know that we're doing this, but at some point in time, you're probably coming up here to 257 to cover that gap as well. So would I be upset if I bought at 140 today? Probably not. I mean, I'm not adding back in right now. I probably have enough of this in ETFs, to be honest with you. But I'm just kind of sitting around. Again, I'm missing out on a lot of these runs. Qualcomm's up at 130. Shopify's at 42. So I'm missing out on runs, but, I got cash on the sidelines. I think the Fed decision next week is going to be key. I think earnings next week are going to be key. And for Faraday, for Sherry, we're still holding at 70. We're still holding at 770. I don't know why. Don't forget to like and subscribe, VRO. I don't know why that was hidden. It could be VRO. It could be just another bull run in a bear market. And if we look at SPY, I mean, that's certainly what it seems like. On this 4-hour chart, you can see we're just putting in kind of, to where we were in December. It's no different. We're definitely having trouble breaking that 400 on the SPY. You go to a daily, and you've got a shoulder here, a head here, and then another shoulder here. So do you think it's a breakout? Could be. I mean, you could look at it this way. Here's a shoulder, there's a head, and here's a shoulder. So it's not an inverse. It's just a roller coaster. Oh, you're not even looking at that. I got to post this podcast. Hold on. Ziptrader GNS LYT CRM. We're going to say Spotify, JP Morgan, Bank of America, Wells Fargo. I'm going to take out Avaya. Nobody's going to listen to my podcast for Avaya. Boyle, KOLD. God, Netflix is just such a freaking killer stock. Cat. And all those have the symbols. And so we're going to go over to Anchor. Yeah, I'll switch over to the screen once I'm done posting this podcast. I don't like you guys. Some of the podcast stuff shows like my balance and some of their advertising stuff, and I just don't I don't think it's something that I should be showing. There we go. And we'll just put this in. Copy. Oh, dogs are up. I don't like you guys. You guys take up too much of my time. What can I say? We're going to put in GNS LYT Carvana, Netflix, Amazon, BBBY, Goog, Spy, Apple, Amazon. Oh. Do you have to go out? Do you have to go out or you want me to hug you? Oh, you just want a hug? Okay. Oh, here's the sick dog, by the way. Yes, you were up all night. I know. I know. There you go. There you go. Yes, it's okay. I know. I know. You want to tell everybody you snore? You want to show everybody how you snore because you have a deviated septum? I know. I know. You're an old girl. You're hitting 10 or 11. There you go. Okay, she's not going anywhere, so. Tesla, BAC, coin. No. Oh, you have to be picked up too? You want me to pet you? There you go. There you go. I love you too. Big Bank Cash. Oh, there you go. Okay. Let's go, Brandon. This isn't a political discussion. Upstart. I'm gonna say Upstart. Buy. I'm gonna say Carvana. Okay. And okay. Oh, my title. Stocks, short squeezes, and earnings. Market update. 1/23/23. Hey, today's the 23rd of the 23rd year. Publish now. Okay, do you have to go out? I'll be right back, guys. I gotta go let these two out. Okay, come on, let's go. I don't understand why the two of you, there's no way you need to go outside. No freaking way. You're gonna go out here and you're gonna stay there. Okay. Ooh-wee. I'm gonna plug that one in. Let me see. I like VRO. Politicians are not. My pups are my life. Those two. Even though Penny just went outside and stared. She runs outside and just stares. Hey, Sherry, I was wrong. 74 cents. I mean, you still have confirmation on this one. So, Sherry, just so you, I think Sherry's new, so I have to kind of explain this. I kind of go by this 9-day, this green line right here. And as long as you're above that, I'm fine. When you're getting above the Bollinger Bands here, I get nervous. But that 9-day, and there's a 5-minute chart, that 9-day is typically what I use to kind of lose momentum. It's still got momentum and you got green candles. So at 75, you're still good on this Faraday one. I could get into this one, but let me post this real quick. Oh, no. I think, hold on. Okay, and we're going to go down to our notes. Okay. Okay, and we're going to... Melly. Carvana. We're going to take that out. We're going to take that out. We're going to take that out. We're going to take this out. take that out. UPST, and I just need 2 taken, and we can easily take 2 out, and we'll cut this. Not that I'm not listening to you guys, I'm just trying to tweet. Okay, first one's out. I think I get more listens off Twitter. Oh, here we go. Here we go, and they're off. Yeah, Sherry. Rule number 1, never listen to a guy on the internet. Rule number 2, don't listen to Jim Cramer. What's rule number 3? I forget. I always forget rule number 3. Oh, always listen to rule number 1 and number 2. There is nothing out there whatsoever. Nothing. Nothing. I'll look at CHR. That's one of our, I think that's a Tom name. And realize some of Tom's names, I think, are their dividends seem huge, but it's in special dividends. So that dividend is crazy because the last time the dividend was paid, it was a special dividend. So, I love you. I love you lots. But this is not good for anybody. Okay, we're going to tweet this one out. And then we're going to close this down. And then we're going to tweet this one. And we're going to say... I'm so glad I can make your dogs go nuts. Hey, come here. Daisy, there's nobody there. Daisy, I love you. SQQQ, QQQ, and let's do some of the, by the way, TQQQ is at 21. SQQQ was probably, that's going to wind up being my worst trade of the year by far. SOXL, AMD, NEO, I did Amazon, NVIDIA, SOXS, Rivian, Mara, QQQ, SLV, LCID, FF, IE, XPEV, F, Shop, Affirm, SoFi, and I'm just going to do that. Okay. That's going to be fine. That's enough. I've tweeted enough. Become an educated investor. Let's see. My profile. see. Geek Sports liked my post. Okay. Which one was I going to look at for you guys? Let me go back. CHRD. Let's look. Let's look short term first. And Sherry's at 77. Man, Sherry, kudos. Doing well on that one. It's still got all the confirmation in the world. CHRD short term has all the confirmation at 147. This one probably won't move a ton. The problem you're going to have, James, is it's a small cap, and you're only trading $318,000 in volume. So if you want to get a buy and sell order in, you can see there's not much movement in this, but it did pop from 142. It's up 3% at 147. This is just oil demand. Let's go back and look at long term. CHRD. And this is kind of in my sector of, I don't think you should sell energy stocks. I think they had a little dip. I think you're going to see, their earnings are coming up February 7th. The RSI is at 74. This dividend is a crazy dividend. I think you're at 147 right now. Let's see where this volume, where I'm going to take it back to June of last year. This was the high for energy. So the high of energy was June. You're really looking at, why can't I pull this back without, look at that volume shelf. I mean, you're building a volume shelf right here between 131 and 134. 147, you're just crossing that 200-day. The 50 days just moving up. I think you're fine holding. I think before earnings, I think you're going to get to this 160 point. I don't know if it's going to go down because it has had quite a run. But James, honestly, what do I tell you? Identify your trade before you get into it. What do you want out of this? Because CHRD, I can show you Devon. Devon Energy has dipped way a ton while I've owned it. This dividend is 3.51% on CHRD. It's not crazy. It's great dividend. Your 52-week high is 164. Year to date, you're up 4%. But in comparison, let's look at DVN. This is one I've owned since I think I bought it at 50. It must have been, I think it was back here in July. I think it was around 58 in July. That I think my average purchase price is like 56 or something. I might have bought here at 56 at this one. And then it went all the way down to 53. I added a little bit here, not much. But you can see, I'd have been better off trading it and just earning the dividend and then trading right after the dividend. But I haven't. And just forget. So, you're at 66 right now in Devon, coming up on the 200-day. Am I selling just because I have 10% in this one? No. So, again, I think with CHRD, I don't think you're in a bad place, but I think with CHRD, you just have to identify, okay, what was my trade going to be? What's the protest? Oh, protest in Atlanta is about this Cop City thing. And this is the middle of me appealing to the conservatives in the group. It's bullshit. It's destruction of property. It is, out of the 6 people arrested, only 1 person even lives in the state of Georgia, and he's outside of Atlanta. It's people making a problem where there really shouldn't be a problem. Cop City that they are protesting, which is a $9 billion or $10 billion, it's a crazy amount that they're spending on this, is kind of a military fortress for the police to be trained. And they're putting it in a neighborhood that the neighborhood doesn't want it. Well, these fucking people are homeless who are kind of protesting, and they just kind of came here to protest and sit on this land. The developers don't want them here. The neighbors don't want them there. The neighbors don't want Cop City, but they certainly are not joining in the protest. So I don't, the protest is just, it's a bunch of bullshit is what it is. It's a bunch of people who want to basically make something out of, something that is controversial. Police shouldn't be trained in military tactics, but they are. Yeah, exactly. Mike, 11 o'clock. I'm going for a walk. Um, your little pup is sleeping. Daisy, by the way, is a dog that was thrown in a dumpster. She was forced to have puppies at a super early age, and there were complications, and then the breeder threw her in a dumpster. And she has major anxiety over noises because nobody knows how long she was in the dumpster. But then she was thrown into a kill shelter, and she's the sweetest little dog. She's just got anxiety. CRM I can go over. I went over that Elliott Management took a position in it. I am much more comfortable with you buying it at the 130s than the 150s and 160s, but I don't think that you're crazy buying it up here. Personally, I own it, I think, at the 200 level, if you want to know the truth. And I'll probably start adding to my position. I think it's a well-run company. The problem that you have is CRM. Their PE is 546. Their forward PE is 26. They're just spending too much money. They have to cut staff. And even though they announced some layoffs, they have to cut more. But their performance year to date is up 14%. And that's just because they've been cut so much. But they're still super, super expensive. Earnings reports are usually after the market, between 4 and usually 5 o'clock they come out. The YouTuber I reacted to was Meet Kevin. He's just a douche. I'm just so not a fan, but let's see. We'll look at the live YouTubes again. I mean, here. I'm live. I love Sarah Cooper. Getting started with technical analysis. 200 people watching that one. Music. AMZ. This guy's still going strong with 300 people watching. They have 6,000 people watching a day. This guy's got good, I think, production value. I just worry about he's not leading people down a direction that I think is right. Live order flow setups. Yeah, that guy's charts. Whew. That's a color wheel right there. Live Tesla trial continues. Elon's getting sued. Crypto lifer. Guy's got a good setup. But I guarantee you we tune into this one and hold on. Let's tune into this one. And I may have to mute it, but.
That is a scam. That is not me. Don't get excited that you're actually getting DM'd by someone on YouTube. All right? The second you think about it, my life is super busy. Like right after this, my wife drags me to Costco's. Then I have a meeting at 1 or 1:30. I have another meeting somewhere in the afternoon. I need to sit with my team and go over things that we're doing. I have a one-on-one at 6 o'clock. You know what I mean? So like my day is planned already. Like I don't have time to play games. All right? So I don't have time to go DMing everybody. Hey, thank you for joining the group. I have some others, if you're getting DMs from someone that claims to be me, it's not happening. It's not happening.
Book one, tutoring and trading class here. Telegram, he's got a Telegram, Twitter.
I love you, bro. You're the best, man. Some coins pump here and there when Bitcoin goes sideways. When Bitcoin dumps, most of the market goes with it. Exactly.
I don't think he's scamming.
Yeah, too busy just taking care of business. Shout out to Lieutenant Dan Dangle in the house.
He's not as scammy. Hold on, I need to mute this. Sorry. He's not as scammy.
Now, see, rising wedges break down, but they don't break down when the stochastics are low. I made a whole video about this. You're more likely to look. That's a shoulder head and a right shoulder, in my humble opinion. It's kind of squirreled away inside. Where I would suggest a big.
He's not scammy, but
I could be wrong.
This is a guy who sold. I mean, he's not scamming anybody, but he's definitely a guy who sold used cars until used car prices kind of crashed. I mean, let's be honest. He's a guy who's, my wife is taking me to Costco's, and he calls it Costco's. Costco's. Boomer. So and look at his. I mean, and this guy's still on. 86 people watching him. There's a hell of a lot more people watching him than me. James, you identified as a JCPenney suit. Boomer. I mean, that's Saks Fifth Avenue if I've ever seen it. Off the rack. Tasty Live. These guys, or these girls, I think we've watched them before. They're actually pretty good. The problem that I have is get up to $2,000 cash when you fund your Tastyworks account. I think they've got a whole crew. Yeah, I think they're good. They're just, again, fund your account. That's where I'm kind of, let's see. What's Tasty's Works? Better bonus, better broker. So it's a broker. Transparent pricing. Unlimited shares, 0. Options, dollars per contract. Futures, $1.25. Cryptocurrency, 1%. Why not go with Fidelity? Let's see. You have to put in $100,000 to get $2,000. That's a 2% bonus. What the fuck are you doing? Sign up for $2,500 with Fidelity, and I'll get you $100. Just email me. I already got some copyright strikes against me, by the way, for playing some of this stuff. And of course now I lose everybody. But I went over CRM. Do you think 150s, 160s? CRM probably. I mean, at some point in time you're getting back up there. I sold the bag on Netflix, selling at $242 after earnings. Yeah. Yeah, Rat Vibes is a good way to describe him. I didn't like it. I mean, I can't say that the guy's scamming people. I mean, look at this guy whitening teeth and shit. Swift canceled crypto. ChatGPT. I hate making rash judgments on people, but I mean, I'm a guy that you could hop on and say, look, this guy doesn't even fucking shower before he gets on YouTube Live. No. This guy's got 3.2 thousand views. And look at the charts that he's got up. I mean, I think we go, make more money in 10 minutes than you do in a week. I mean, come on. The stock market show live, S&P SPY book map. 222 people watching. So, GLYC. Let's go back to stocks. And if Zephin's popping in, did Tom give this one? Oof. It's a great chart. Algorithm has you out of it, but it's probably popping back up. Algorithm has you out. But remember, the algorithm's slow. It's based on 4-hour candles. So let's go over to Active Trader Pro. And I want to check in on Faraday too. Is that 80 yet? 77. Man, and that still has, look at that one. Look at the confirmation on this. I mean, we started looking at 71. You've made 10% in what? 20 minutes? And this is what's crazy. Here's how you can look at this stuff. So 10-day volume average is 44 million shares on this one. So far to today, you've traded 53 million shares. And I know there's a website where you can look at intraday heavy movers and stuff based on volume. Let's see, volume movers. We can look at this one. If Active Trader Pro, there you go. Aqua is a good volume mover. Is Faraday's not even up here. CVKD is the top volume mover. Look, 1.9 million average per shares, 6.2 million, and you move 5%, but you have no confirmation it's coming down. Aqua is one that was purchased, average 500,000 shares. You've traded 8.6 million shares just today. PLRX, this is one on average, 10-day volume, 535,000 shares. Today you've traded 8 million shares. It's up 49%. We're putting this one on tomorrow's look. Oh, this is the, they had some type of, let me see, PLRX. This was a biopharma where they got an approval for something. An unexpected feat just sent soaring more than 50%. Shares rally at 75%, let's see. It went up even 75% since this was released. I mean, that's the crazy part. Soared 75% on Monday, the day after the company said a high dose of its experimental treatment for idiopathic pulmonary fibrosis met the primary and secondary endpoints in phase 2A clinical trials. I have no fucking clue what that means, but it's positive. So you can see this one, again, PLRX. This was the day after. This was trading in pre-market. I mean, you went all the way up to 42 in pre-market. You're down at 33. Any reaction in the market is an overreaction. But 8 million shares. VAXX. This is one. I don't even see Faraday on this list, which is crazy. But this is 246,000 10-day volume. 3.9 million so far today. Let's see. Usually you don't recognize a lot of these names on this one. Agri is up 10%. 511,000. I don't know why Faraday's not on this list. FFIE. It should be. Maybe because it hasn't met the listing requirements. Maybe that's why. Highest social sentiment. Let's look at this. The hair did it for me. And my lighting's bad. I mean, I need to get the purple lights behind me and stuff. Qualcomm is a social sentiment. God, look at Qualcomm today, by the way. 128 and you're up at 131. I mean, for a company that you don't mind holding for a while, Shopify, has just been soaring. I own Shopify, but at a big dollar difference. So this is Splunk, which I went over. It had a cross up. Fair use. No, it was so Mike, it's not, I basically eliminate, it was from a live stream where I played a Seinfeld episode. And so I did get a strike. But look here, we'll go over our core portfolio. Apple, I mean, this is the core portfolio. If you're subscribed to TrendSpider, this is, I provide you this core portfolio and you can look at it. Apple up 3% today. Amazon kind of flat, up 0.1, still good. BAC, which is one Bank of America. I think there's a $40 stock. It's hanging on to that 200-day right there. It's up 0.89, almost 1%. The algorithm got you out with a 4% gain. I don't think you should have gotten out on that one. I didn't kind of highlight it. Cleveland Cliffs, I mean, it's down 1.5%, but look at this buy at $16. You're at 20 right now. You're coming down to fill this gap at 1933. I guarantee you. When you fill that gap at 19, your floor is going to be 15 because that's where the 200-day is. But this golden cross right there, great trade. Costco, I said get in at 450. Did I get in at 450? Fuck no. I should have. You got this gap up here, but it's all the way up at 492. It's up 2.72% today. People are just believing in the consumer today. Devon Energy, up 2%. Went over this one. And I'm just going over the core portfolio right now. Up 2%. Google, up 1.55%. So far, out of all these names, there's only been one that's down. Google's up way. It's going to, just tear above that 200-day. Goldman Sachs up 1.18%. It's going to get back up to this gap at 367, I bet. It's just under the 200-day. It's just kind of over it. The 200-day is at 342. I don't know that I'd necessarily run back into this one, but you can see the volume's kind of showing up on this one. It's ex-dividend date, which isn't huge. It's March 1st. You have time to get in there. J&J reports tomorrow. You've seen this one break down from that ascending triangle. Completely broke down. Do I think that this one's coming back? I think at 168, you buy this one. I mean, your worst case is 163, 165. I don't think, again, this is part of my core portfolio. I own probably 5 figures in this. It's not a huge position for me. Coke, I own a bunch. I sold a bunch in December, took some gains from like 5 years. It's at its 200-day, $60. I've told you it's coming down here between 56 and 56.50. At that point, buy again. This one makes no sense not to buy when it dips under that 200-day. If you want to start a position in this one today, start a position. MPLX, this one, I'm in it for the dividend. Was it 8% dividend? MPLX, let's say 9% dividend, 8.99%. Man, it's just been a monster for me. It continually pays out. It's above its 200-day. It's part of the energy thing. Merck, I've talked about this one. This one's got an ascending triangle that kind of broke down. I'd like to see you more at about 100, but are you upset at 110? No. mRNA, this is a trade. I have it in our core portfolio because you can try and trade around this one. The algorithm makes you 12%. Buying and holding makes you 31%. This is just part of our fabric for the next 10, 15 years. mRNA is going to be one that comes out with new stuff. Microsoft is at 243. Just fucking buy Microsoft. Oxy is down 0.10%. I have no idea why Devon is up and Oxy is down, but you got this ascending triangle. Let's see if there's any new inside buys. January 11th, O'Neill Clare, an award of 1,000 shares. But doesn't look like Buffett's buying anymore, but he's got billions of dollars in this company. I mean, no reason to buy and sell this one, but once it gets over that 200-day, seems to kind of put a little struggle up. Palo Alto Networks. I own this one at about 160, I believe. 170, somewhere in that neighborhood. I'm not selling it. Core portfolio up 2% today. PepsiCo, our third one that's down, but is only by 1.4%. This is probably coming to this gap at 164 to 166. Do you want to time it and wait for it? Fuck. Add to your position. Just buy it. This is one you hold for a long time. Pfizer. I've held this one forever. Probably should have gotten rid of it in the 50s or so. It's probably coming back. I mean, you're going to see January 30th. The problem that they're going to have is they're going to announce that the United States government is not paying for the vaccine anymore. But insurance companies will. This company will be fine. I mean, the floor of about 43 is where you're going to be. QCLN, this is clean energy, an ETF. This buy-in at 47, you're 53. I mean, for the year, it's crazy. Qualcomm is up 6% at 130. This one we had a buy-in at what, 107? You're at 130. 20% move. Great move on this one. Roblox, I say, is a $40 stock. I was waiting for it to get back down. Never came back down to the 26, but you're still in this one. You got some gaps that have been completely covered. You've got confirmation. You're above the 200-day. I think you're going to 40. But am I buying at 36? Nah, it's got this run. But if you're in at 26 or anywhere down near there, fantastic. It's part of the core portfolio again. Shopify, part of the core portfolio, up 6% today. It's creating a gap. Do you get into it? No, the RSI is too high. But if you're in at 34, man, fucking great trade. But again, I just buy and hold it. Snowflake. I think I own this one at about 160, 150, somewhere in that neighborhood. You can see it's kind of put in the range here. It will probably hit this 200-day at 157 and then come right back down. So continue to buy it when it dips lower. I haven't sold it. I just continue to buy it. Simon Property Group. This is a great dividend. They own a bunch of malls. Their earnings are coming up February 6th. Not next week. Yeah, next week. So, just hold it. But it's up 0.87%. Target, 164. When you were down here in the 150s, I told everybody, buy Target. 143 is the buy-in. You're coming up here to cover this gap first at 177, and then you're going to cover this gap to about 220. You'll see. Tesla, I've kind of been telling everybody, wait for the $85 price. I was wrong, but it's part of the core portfolio. You're up 5%. It's part of the ones that you just want to hold and buy. The only reason I got out of Tesla was, it was December. I needed some money, and it was one that I had enough gain in, and I was still unsure of. So I sold about that 120 level. TSM, this is another Warren Buffett one, Taiwan Semi. You got gaps all the way down here. Am I buying in here? No, but it's part of the core portfolio at 4% up. If you had the core portfolio, holy shit. There's only in our core portfolio, there's only two stocks that are negative out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15, 16, 17, 18, 19, 20, 21. It's about 40. I would say there's about 40. Wells Fargo I am holding. And the reason I'm holding Wells Fargo is two reasons. I identified it as a semi-long-term trade. And when I say semi, I wanted to see what this button hook did. And now that we're over the 200-day, I think if we get closer to 50, I might sell. And that's a question that I'll have to make for myself when we get there. But you can see the RSI right now is at 66. The MACD is kind of crossing up. I don't know that I necessarily am heavy into this one. I think I've got a couple $1,000 in. It might be $4,000 or $5,000. It wasn't a huge buy for me. But it's one that I had conviction in. I wanted to hold through earnings. I liked it. The dividend isn't coming up anytime soon. I might hold it for long term. And the reason why I hold it, there's two reasons. It's in a brokerage account. So it's after tax. So if I hold it for long term, I'm probably better off. But if I sell it and take a profit, then I can kind of use that to write off against some short-term losses if I do have them, like on SQQQQ. Yeah, PepsiCo. It's interesting. Pepsi and Coke. I own both of them. It's insider info, but it's not like crazy insider info. If you could get me the what they're going to announce on earnings, that's crazy insider info. But the PE is 24, and you look at Coke, their PE is 26. So I think Pepsi has a better opportunity than Coke, but they trade so much in line. You're 9% below your 52-week high in Pepsi. And with Coke, I think the high is 67. Yeah, you're 10% below your 52-week high. So I just kind of, if I have, say I have $100 at the end of the week, and this is what I was trying to tell my friend this weekend too, is with fractional shares, I used to, at the end of every week, I'd, maybe make my lunch instead of going out to lunch. So I had $5 per lunch was kind of my goal. And maybe I had $25 extra. And at the end of the week, I would take my $25 and I would, if it was to go into Coke or Pepsi and I just wanted to split it, $13 in one, $12 in another. That's what fractional shares get you. And you just keep doing that every week. Money that you save and you identify that you don't need to necessarily spend, you just kind of throw it in there. So, okay. If you haven't already, hit that like button. If you're still here, there's no reason for you not to hit the like button. Hit that like button. Let me see. I want to get out of this. There we go. It says 2 watching. That's funny. Let's see. 14 watching. I can't see. God, you're a terrible influencer. I am. I do eat. I used to eat a lot of that kind of stuff. I mean, Brandon, I'll tell you. Like for instance, I go to Walmart and I buy tuna steaks. There's these Sam Club's tuna steaks. They're super thick. And I will buy a bunch of romaine lettuce. Romaine lettuce.